Goods and Services Tax, India. Goods and Services Tax, GST, is a proposed system of indirect taxation in India merging most of the existing taxes into single system of taxation. It was introduced the Constitution, 101st Amendment, Act 2016. The chairman of GST bill is Union Finance Minister, which is currently Arun Jaitley. GST would be a comprehensive indirect tax on manufacture, sale and consumption of goods and services throughout India, to replace taxes levied by the central and state governments. Goods and Services Tax would be levied and collected at each stage of sale or purchase of goods or services based on the input tax credit method. The introduction of Goods and Services Tax, GST, would be a significant step in the reform of indirect taxation in India. Amalgamating several central and state taxes into a single tax would mitigate cascading or double taxation, facilitating a common national market. The simplicity of the tax should lead to easier administration and enforcement. From the consumer point of view, the biggest advantage would be in terms of a reduction in the overall tax burden on goods. As India is a federal republic, GST would be implemented concurrently by the central government and by state governments. The taxes which will be subsumed into GST include central excise duty, services tax, additional customs duty, surcharges and state-level value-added tax. Other levies which are currently applicable on interstate transportation of goods are also likely to be done away with in GST regime. Presently, the Constitution empowers the central government to levy excise duty on manufacturing and service tax on the supply of services. Further, it empowers the state governments to levy sales tax or value-added tax, VAT, on the sale of goods.